On behalf of the Sustainability Reporting Standards Board, myself CA Shweta Goyal, the Secretary to the Sustainability Reporting Standards Board, would like to welcome you to today's fourth session of our webinar series, Demystifying Sustainability and Catalyzing Growth. Today's session is centered around a critical theme of integrated reporting. Would like to welcome our esteemed guests and moderators of the today's session. Let us now begin the session. I would like to invite CA Chintan Ramivia ji to kindly take the session forward. Over to you, Chintan sir.
Thank you, Shweta ma'am. First of all, for inviting me to share. It gives me a great honor to introduce today's session speaker, CA Ankit Maheshwari. Ankit sir is a dynamic chartered accountant with 15 years of experience across various geographies, an expert in integrated reporting and BRSR frameworks for large listed companies in India. He is a special invitee to the SRSB and head technical reviewer of the research committee. Ankit sir has authored publications on financial reporting practices and actively advises on government initiatives in Rajasthan. His research and mentorship have significantly impacted the finance and accounting industry. With this brief introduction, I would like to welcome CA Ankit Maheshwari. I think, sir, you can start with the session.
Thank you, Chintan, for a very warm introduction. I'm very happy to have you as a moderator, and I think together you and Kinjal will make sure that for next few hours, our learned audience, get some new perspective over integrated reporting. Let me first thank the chair and vice chair of the Sustainability Reporting Standard Board. I would personally place my thanks to Secretary of the Sustainability Reporting Standard Board, Shweta Goyal ji, for having it at such a short notice and making sure that a very relevant topic at this point of all year is covered while all the companies are preparing their integrated reports. I have Chindu and entire SRSB support system who have been working tirelessly. I am blessed to have such a fantastic support system with this webinar. Today we'll discuss integrated reporting. And when I say integrated reporting, a lot of things might come to your mind. But let us look into what integrated reporting is, from where it comes from, to what extent it is related to sustainability. I'll share my presentation and happy to make it more interactive, not like a monologue, making sure that everybody learns something out of it. But we're discussing a very critical topic. In fact, we're discussing a report which came before then the BRSR report came in India. So the conceptualization of integrated reporting actually came out in 2017. Just share my screen. Chintan, my screen is visible now?
Yes, sir.
Yes, sir, visible. You can put it on the screen, PPT mode.
Okay. So, okay. So, conventionally, let's look into what has happened at the level of the regulatory landscape and try to understand how integrated reporting is born, right? So, as far as the sustainability reports regulatory landscape is there, we see the BRSR and the BRSR core was in year 2021 when India transitioned from business responsibility reports to the BRSR reports. And further in 2023, we had the BRSR core framework coming up, which talked about those 9 KPIs to be assured or assessed, right, pertaining to water, waste, energy, GHG. Parallelly, in 2023 only, SEBI came out with a concept called ease of doing BRSR, where they made some modifications. I don't want to go into the technical stuff of BRSR, but these are the two sustainability reporting driving regulatory frameworks which are present in our country. And essentially, a BRSR looks like a tabular report if somebody has looked into talking about a general disclosure section which has point 1 to point 26. Section B, which talks about the management and process disclosures, ensuring that the governance framework is prevalent. And section C, which talks about the principle wise disclosure from principle 1 to principle 9, aligning these principles to the 17 United Nations Sustainable Development Goals. Friends, you will be happy to know that India is one of the first country who had a regulated framework. Now we have ESRS also, we have Japanese sustainability reporting. But India was the first mover where they came out with the sustainability reporting in a regulatory landscape, which was monitored by national guidelines on responsible business conduct. And India moved a little ahead with ease of doing BRSR. Yes, certain questions are still to be answered. As of now, the value chain partners have moved down to 2%. The assurance has been replaced by assessment or both. A lot of things are there, but we have progressed pretty well. And in fact, in this year's BRSR, we have to also report our green bonds, right? But something happened in 2017. This was when the integrated reporting was introduced. And before I take you to this PPT or this presentation, I want to move to the advisory because lot of companies in this country are essentially preparing integrated reporting, but they don't know from where this concept has come from. And that's how I set up the session in the beginning, that we'll understand from where the concept of integrated reporting is born to absorb the framework, right? So let's look into what happened in India in Jan 2017. I am going through the SEBI's notification on your report, which talks about integrated reporting by listed entities. The circular is communicated to all exchanges and all listed companies. And that is why you see that the majority of the Indian corporates who are preparing integrated reporting are essentially listed. So as of now, to be honest, I have not come out with any unlisted entity preparing an integrated report, but the listed companies through this circular started preparing the integrated reporting. Unfortunately, we were in 2017 and now we are in 2025. No advisory from the exchange or from the SEBI has come on integrated reporting barring this. But parallelly, a lot of things have happened, which I'll discuss. But before that, I want you to take a look of what we are talking on, what what SEBI is basically talking on integrated reporting. So SEBI has mandated so this is an era, this circular is of an era when we do not used to had BRSRs, right? We had BRRs. So it says, it starts, SEBI has mandated the requirement of submission of BRR for top listed company, 500 listed company. Now the BRSR is mandated to top 1000 companies. I hope that is clarity. We have clarity over it, right? Under the regulations of LODR, the key principles which are required to be reported by the entities pertains to areas such as environment, governance, stakeholder relationship, etc. So friends, this came when SEBI said India has BRR, and in business responsibility reports, people are reporting environment, governance, and stakeholder relationships. Now, it says in the second paragraph that today, and this gives you a greater perspective why an integrated reporting is important. So 20 years back, when I used to look at the annual reports, they talked about essentially two very important sections. One was your management discussion and analysis section, which we still have, and which is driven by SEBI LODR. And another one was a financial statements. Now we have standalone and consolidated, and a very static black and white kind of an annual reports used to reach to the shareholders of the company, where the shareholders had a lot of focus on assessing from MD&A. They used to assess the industry overview, the global economic scenarios, the external environment, and how the company is responding to it, and how essentially it fits into the competitive world. And from financials, they used to make their investor, or the investor used to make their decision making, right? So this was conventional. When you look at today's annual reports, you will realize one thing. They say integrated annual report. Look at any company. Look at Unilever. Look at Reliance. Look at Wipro, Infosys, TCS, Tata Steels. They say a concept which they call it as integrated annual report. So what this integrated annual report is depicting us, this is answered in point 2. It says today an investor seeks both financial as well as non-financial information to take a well-informed investment decision. That means there 2017 an era changed, and a thrust was placed on non-financial information. An integrated report is a framework of presenting, now I'm coming to the core of it, of presenting the non-financial information of the company. How to present, what to present, yes, we'll discuss it. But from the second line, it essentially does not mean that an integrated report is a sustainability report. And I am one of the advocates where I think that integrated report is not only a sustainability report, but a more holistic report. If you're looking for sustainability reports, you look the BRSR, you look the reports which are prepared in accordance with GRI, CDP, CSRD, ESRS. Those are proper sustainability reports. But an integrated report is more holistic, a very visually embedded report. A lot of visual aids are given, a lot of stories are there. But look at what SEBI wants to say. So say for making a well-informed decision, now the company should start presenting their non-financial information. So we are not discussing a new concept, a concept which is 8 years old, and a concept on the planet which is the International Integrated Reporting Council was constituted in 2013. And we are in 2025, it is a 12-year-old concept. And before SEBI mandated it, a lot of Indian companies were still preparing the integrated reports. They like this idea of interacting with their stakeholders, not shareholders only. Because again, a transition with this reporting has happened, that earlier we used to talk that the annual report should move to the shareholders. The new era, the modern age reports talks about the integrated annual report should move to the stakeholders. And when I say stakeholder, it is a wider term. Stakeholders are my investors, my shareholders, my community, NGOs, my customers, my value chain partners, media, regulators, and an integrated report talks about all of their interest. So then we are again on point number 2. So it says, what is an integrated report? An integrated report aims to provide a concise communication about how an organization's strategy, governance, performance, and prospects create value over time. When you look at the Bayer law, you realize it is nowhere talking about core sustainability. So the heart of the integrated report, if you ask me, is the value creation model. And that's why it says, how do you demonstrate an organizational strategy, governance, performance, prospects, and the value? And when they say value over time, an integrated report will always depict a capital's value over a short, medium, and long term. A creation of value to each class of stakeholder over a short, medium, and long term. Today we are just discussing the law, so possibly you might not be able to resonate to what exactly I'm trying to say, but all you need to understand is, in a layman's language, that it is nothing but a way to disclose your non-financial information, a way in which a non-financial information which might consist of my organizational strategy, governance, performance, and prospect are creating value. How? How do you demonstrate it? I'll come on. It also says further, the concept of integrated reporting is being discussed at various international forums. The purpose of integrated reporting is to provide shareholders and interested stakeholders with relevant information that is useful for making investment decisions. Just a minute. Yeah. So again, to lure investments, companies have started interacting with their stakeholders. Companies have started pushing non-financial information to their stakeholders. And the purpose is that the stakeholders are able to take important investment decisions basis the non-financial information, not only the financial information. What is non-financial information? We have to discuss. Who can be stakeholders? I've given you an exhaustive kind of a list. There could be some other stakeholders. There's a proper process of stakeholder engagement and materiality assessment. We'll discuss it. But till now, I think this has to be very clear. Now it says, fourth, in this regard, the International Integrated Reporting Council has provided the following guiding principles.
So just 1 second. Your screen you are moving, right? Because here there is only one specific screen that is coming in. I think
It is.
in sharing is not properly coming.
Are you able to see?
I'm just able to see your first regulatory framework, NGRBC, ease of doing business.
No, I am reading the SEBI's notification.
I'm not able to see it, sir.
Okay.
I thought you were just saying, so I thought I should intervene.
No. I'll share it again. Sorry. And I'll repeat it again for a minute, right?
Sure. Yeah.
Let me come back. Now, do you have this, Chintan?
Yes. I can see now. Yeah.
Okay. I'm sorry.
No,
I
no
switched
problem,
it over my laptop, but probably it was not switched on the Zoom. Sorry. So again, to those who missed it, by the way, we discussed in a lot of detail, but just giving you what SEBI came out on February 6, 2017. They came out with a circular. That's the only advisory we have, talking about preparation of an integrated reporting. This is where they say that SEBI has mandated the requirement of BRRs. The key principles are this. Today, an investor seeks both financial as well as non-financial information. From there, I was reading it, right? Now we have not missed too much out of this notification, but it is my guiding principle through which an integrated reporting is prepared. So now I come on it. So in this regard, this is in 2017. Now you can read point number 4, that International Integrated Reporting Council has prescribed the following guiding principles. which underpin the preparation of an integrated report, specifying that the content of the report and how information is to be presented. So it was 2013, friends, when International Integrated Reporting Council was formed. And somebody who thinks why chartered accountants are very important for preparation or assurance of an integrated report, I tell you, I have a very strong base of it. 2013 IIRC came, the International Integrated Reporting Council got merged to a foundation, VRF, Value Reporting Foundation. The Value Reporting Foundation eventually got absorbed into ISSB, and ISSB got absorbed with IFRS. So your financial reporting standard risk setter at a global level, IFRS, is your non-financial reporting standard setter also at a globe. And at a level of SRSB also last year, we had a lot of queries from Ministry of Corporate Affairs which talked about where MC is putting up to the stakeholders, including the ICI, that whether a financial reporting standard setter should be a non-financial reporting standard setter in the country or not. Whether the integration, because like your IFRS 1, IFRS 2, in sustainability, you have IFRS S1 and S2, two standards have already been rolled out. So this global change of Value Reporting Foundation or IIRC getting merged with IFRS gives me a lot of belief that there's a lot of integration of a financial information to non-financial information, and that is why IFRS is spearheading this entire thing. And the role of chartered accountants who are practicing sustainability is much wider. Everything you will put here in this report, you will realize when I finish this session, the IFRS expects you to quantify it financially. We will understand this, but I hope I am able to clarify all kind of regulatory, global regulatory changes and how locally it has come to us. So if today you have to prepare an integrated report, if today you have to understand an integrated report, if today you have to assure an integrated report, then the guiding framework is of IFRS, which remains to be primarily same which what IRC has prescribed. But they have come out with these two standards, S1 and S2, where S2 has a lot of thrust on connecting non-financial information to the financial information. Right? So now what are the contents it talk about? We will discuss it when we discuss a report hands-on. It talks about strategy, focus, and future orientation. It talks about connectivity of information. It talks about stakeholder relationships. I will come on detail of every point, but I just want to talk about what are the core elements. If you're preparing an integrated report, it should talk about your strategic focus, future orientation. It should give a holistic picture of interrelatedness, dependencies, combinations between various capitals. It talks about how do you, I told you in the beginning, how the stakeholders relationships are managed and how an organization communicates to its key stakeholders and addresses through its integrated report, gives them a insightful information. It talks about materiality. And just like your ESG material matters, I hope you recall when we discuss BRSR also discuss about material issues. In general disclosure, in point number 26, in BRSR, we were disclosing material issues. You recall that? Out of the material issues in next table, we used to talk about risk and opportunities, whether a material issue is a risk and opportunity. We used to talk about the positive, negative impacts, why this is a risk, how the organization is mitigating with this risk. All this is talked about. Similarly, an integrated report also talks about material matters, and this materiality matrix needs to be prepared by engaging with the stakeholders only. Will come on it. Lot of chartered accountants are doing this activity which is called SEMA, stakeholder engagements and materiality assessments, where just like your financial materiality, the companies have started discussing about the non-financial material issues. Your water, your waste, your climate resilience, your biodiversity, your gender diversity, everything, everything is now done in this materiality matrix. Last year, another unique development happened in the space of materiality matrix. While India came up with BRSR, Europe came up with ESRS. And since IFRS is a European, precisely, it's a global framework, but primarily a European culture driven framework. So it talked about a concept called double materiality. And I'll show you a double materiality matrix, but something which is important to the organization and which is important to the stakeholder and its co-relationship between the financial materiality also has been taken care while you are doing a double materiality assessment. But an integrated report should essentially have materiality. It should be concise. It should be reliable and complete. That's why the assurance on non-financial indicators, the assurance on integrated reporting, the board's accountability statement in integrated reporting becomes very important. The management has to take the responsibility of whatever data they are presented in integrated report. And while the auditors assure it is the SSA 3000, ISA 3000 and ED 5000 through which including ISA 3410 which is on GHG emissions. As of now the assurance are using those standards to give a limited assurance on the non-financial parameters, non-financial KPIs which are presented. So another learning outcome from here is it's not like you talk very fancy things in your integrated reporting. A lot of companies I see talking way too much than their initiatives. And in technical language, just like in finance, we call it window dressing. In non-financial, we call it greenwashing. So the board is actually made accountable for the reliability and the completeness of the integrated report. Further, it can be assured by an assurance partner like me and you using the standards which I told you, ISA 3000, 3410, and now on a global level we have 5000.
Oh, hello.
Yes,
Hello.
Kinjan.
Yeah. So we have a question here.
Thank you, Kinjan. Thank you. Please
Yeah.
put on.
So there is a question from one person. He's asking that if you could share us your experience and provide an insight on how corporates should transition from conventional to integrated reporting and how we as professionals should equip ourselves.
I think very valid question. So this is the session outcome, and I'll answer it. Uh, I'll answer this. Let the presentation be back. You just absorb this, and I have a specific slide that how an organization should transition into it, and what are the advantages. And as a professional, that's something which is not a part of the presentation, but as a learning outcome. But be rest assured that nothing remains unanswered before I leave here, to whatever extent I know. So,
Okay. Yeah.
Kinjan, we have another
Okay.
question, something on the SEBI framework, if somebody has some specific question.
There
Kinjan,
is one more question wherein it has been asked that how well is integrated reporting being adopted in India, particularly by listed companies?
fantastic.
So,
I think very valid question. So as of now, I'll take this, they say of two things, right? So they talk about two things. From somebody who has asked this question, I'm answering to you. Kinjan, what's their name?
Miss Dr. Chindu,
Okay. So Dr.
I
Chindu,
I could,
okay.
yeah.
So see, integrated reporting is a voluntary framework, right? It comes from point A, and it was adopted by top 500 companies. It was voluntary. It has never been mandated. Approximately 200 plus companies, 200 to 205 companies are preparing integrated report. But unfortunately, nobody went to the guiding tool. There is a change which has happened across the country. These annual reports were generally prepared by finance professionals. But because now we have a concept of thematic report. Like if you talk about Liver's report, they talk about purpose-led future fit. If you talk about Axis Bank's report, they talk about Dil Se Open. So these have been now visually aided, and once this visual aid has come, a lot of branding teams have actually pitched into, and thus nobody is able to absorb this framework in the righteous spirit, and thus majority of the integrated reports looks like primarily sustainability reports, or it talks very limited about their other capitals. And in terms of quantifying, yes, 190, 200, 210 companies are claiming that they have adopted it. But in terms of how well they have adopted it, I think India lags way behind than the other countries who have taken up the integrated reports. Because of non-standardization, because of awaiting SEBI to awaken on it and talk more about integrated reporting after 2017. Because only advisory which came after 2017 was once you adopt it, you don't adopt it further. You can't go back further. So, well, well taken. Still, a lot of market is there. As a professional, to make integrated reports, I think there has to be some passion which you should drive for reading non-financial information. We conventionally, traditionally, being chartered accountants, have a lot of thrust and passion for financial informations. The world has transitioned. The investors have transitioned. If you look at the quarterly presentations, if you look at the AGMs, everybody is talking about sustainability. Everybody is talking about non-financial information. More than that, they are talking about numbers. So as professionals, if we are ready to take that change, how do we build this report? I'll tell you. So coming back, coming back. So this report also needs to be reliable. It also needs to be consistent, comparable. That means whatever KPIs you decide to report in this year, you have to get it. You have to compare it from last 2, 3, 5 years. The more comparability you can give in a non-financial reporting, the better it becomes. Now, what is non-financial? Here it comes. Point number 5. It says all organization depends on various form of capitals for their success. It is important that such forms of capital are disclosed to stakeholders. That means it talks about two things. One, capital, two, stakeholder. If I look at these 6 capitals which are there on your screen, then I have to basically depict each capital's impact on each class of stakeholder is what integrated reporting is. So if you are preparing an integrated reporting, the first and foremost thing is to define a capital, define all these 6 capitals of a company, which is your financial capital, manufacturing capital, intellectual capital, human capital, social and relationship capital, and natural capital. The idea is, if I am talking about a bank, then Axis Banks, if an investor has to take a decision, then Axis Bank's intellectual capital versus Yes Bank's intellectual capital is what we are looking at. And this might not be only looked by Ind AS 38, because the first point which will come to your mind is that we report this in Ind AS 38. What is the value of trademarks, copyrights, patents we have? Then what new we are doing? So it talks about the quantum of the content you created. For example, if you will visit a pharma company's intellectual capital, they'll talk about how many patents they were on the beginning of the financial year and how many number of patents they are at the end of the financial year. If you're talking about a media company, they will talk about how many total number of views they had, unique views they had in the beginning of the financial year, and how many total number of views they have at the end of the financial year. If you talk about manufacturing capital, we're talking about basic KPIs. How many manufacturing facilities I had in the beginning of the financial year? How many manufacturing facilities I had at the end of the financial year? Had it been a service company, had it been a bank, they must have talked about the number of branches and outlets they are catering in the beginning of the financial year and the number of branches they are catering at the end of the financial year. So, an integrated reporting is a concept where you discuss about these 6 capitals, which is your financial, manufacturing, intellectual, human, social, relationship, and natural capital. They talked about a link through which an integrated reporting should be prepared, which I have, to the extent possible, I have embedded in the presentation. And finally, it talks about that the 500 companies needs to prepare integrated reporting. Second, it talks about the information can be provided in the annual report or by incorporating it in MD&A or by preparing a separate annual report. So you have 3 ways to do it. One, you incorporate in your annual report and make it an integrated annual report. 2, you incorporate in MD&A. And 3, you can separately also present the same. In case of the company, in case the company has already provided relevant information, they should reference it. insignificant. As a green initiative, the company may host the integrated report on their website and provide appropriate reference for do the same in their annual report. Not necessarily, because now we have limited printed copies of annual report. So they say that put it and host it on the website. That's the only advisory, and that's why I spent like 30-35 minutes into it. That's the only advisory we have on integrated reporting from Indian regulatory landscape. But the advantage is that I said you 205 companies have been preparing it, making this entire, we have more case studies than the advisory. So we will now switch to the presentation, which will talk more about case studies. If you have any questions pertaining to the regulatory framework, please write it in the chat box. Our moderator Kinjan and Chintan will help us into solving this. But make sure, because from regulatory point of view, I hope it is clear from the global and the local. Now I come, how do we prepare it? So now I think it's clear. We have the BRSR and BRSR code. We have now the IFRS foundation, which are the regulatory, I should not say regulatory, but which are the driving force or the driving framework for integrated. And globally, we have ESRS, we have GRI, we have CDP, through which sustainability reports are prepared. We move ahead. So now we have gone into the history, because I've read the bare notification in front of you. But a main objective which comes from that notification, which is the point 2 in this on this slide also, is that the organization needs to communicate their value creation story, right? And NSE also launched a IR platform in 2017 to encourage companies to adopt IR. So in the entire integrated reporting preparation, you will hear this word value creation, value created, value preserved, value eroded, long, medium, short, way too much. So integrated reporting said, and it starts with a concept which is called integrated thinking, which says that integrated thinking is the capitals, right? It takes into account the connectivities and interdependencies between the range of the factors which affects an organization's ability to create value over time, including a the capital that the organization uses or affects. So we talked about 6 capitals, right? So an integrated report should demonstrate 6 capitals, their ability to create value over a period of time, which is short, medium, and long term, one thing, and their critical interdependencies. How my financial capital is interdependent on my natural capital, or how I am trading my natural capital with my financial capital, or my intellectual capital with my financial capital, or my financial capital with my manufacturing capital. When we have the infographics in the next slides, I think there will be a level of clarity that you people will be able to obtain.
Sir, sorry to stop you between. Somebody has asked that SEBI circular was dated around 2017. They are asking, is there any other advisory reference from SEBI or any other regulatory from India?
So, Chindu, I think that's the context I was trying to set up also, right? That it was only 2017 that we talked about, the country talked about integrated reporting. Unfortunately, parallelly, in 2021, when BRSR came, so everybody's focus shifted on BRSR. However, SEBI only, clarified through one notification where they say once you adopt an integrated report, you can't go back and present a non-integrated annual report. So there's no advisory, but the thrust and focus has gone into BRSR more since it's a completely regulatory setup and since it is in alignment with the Paris Convention which we have signed. So nothing major, but we are still awaiting, something needs to come. But in the other countries, you see that integrated and BRSR both are, or integrated and their sustainability reports both are prepared. So integrated is here to stay if that's there in the mind that there's no advisory. And fortunately has been adopted by 200, 210 companies and across globe is the most adopted or most recognized framework. That's where integration of IFRS S1 and S2, everything is talked about. And we know the capabilities of IFRS Foundation. The way they rolled out their financial reporting standards, we are not very far that all the countries needs to align it to because their accounting bodies are aligned, their regulators are aligned. So you'll soon see S1 and S2 also getting embedded into this integrated reporting.
Then, sir, someone is asking, like, if SEBI have suggested that integrated reporting should be included as part of an annual report, either providing a reference or a link. So people are asking, is there any industry preference? If it is yes, then how or why?
I did not got the question.
So they're asking if SEBI suggested that the integrated reporting should be included as a part of an annual report or by
Right.
providing a reference or a link. So they're asking, is there any preference by the industry or any sector specific industry? If it is so, why?
I am missing it. You got the question, so make me understand.
Yeah, so kind of they are asking ki, is there any preference by the companies that they're separately giving the integrated reporting or they're co-aligning with
As of
the
now,
BRSR?
Indian companies are preparing integrated annual report. So I have never seen out of any company who is separately preparing it. They are pushing it as a part of their annual report only. And there is no industry specific requirements, right, or references. The only thing which India has adopted is putting it as a part of their annual report so that their stakeholder communication improves.
So the
Oh,
companies who have
also,
actually adopted the integrated reporting, is there any industry trends or you can say that these sectors of industries are giving us standout reports?
So I think in terms of those who have better market capitalizations, right, are giving better reports. If you have to, as you go lower down the market caps, if you look at top 20, 30 company, look at Reliance, look at HUL, they all comes from different sector. Look at TCS, look at Tata Steel, right? They are all in top 10, 20 in terms of market capitalization. Their reports stand out significantly. They invest a lot of time in communicating to their stakeholders. But if you ask me which is an integrated report we should look at, then I think Tata Steel's integrated report appears to be excellent in terms of because they have simulated the report. So Chintu, they have done this AR VR, and you can feel like as if you're walking into the company and reading the annual report. That level of simulation they are able to do it, right? So in terms of designing Tata, in terms of content, I think top 10, 15 stands very close to it. But I'm personally attached to Liver's report as far as an integrated report is there. I find it very appropriate. In terms of banking, you will find Axis Bank's report has to be a standing out report. Even SBI report is an excellent report in public sector banks. In public sector undertakings, you'll find ONGC to be a standout report. The way ONGC is able to demonstrate it. So not sector specific, but for a manufacturing sector, there is much to disclose than a service sector. A manufacturing sector gets lot more confused when they are, service sector gets lot more confused when they're depicting their, uh, I would say, manufacturing capital specifically, plus their natural capital, because the water, waste, energy to measure into service sector energy is okay, but water, waste, GHG is little tricky. So uh, you'll find majority of the large ones only to incorporate it or imbibe it with a more sincere way. Any other question, Chindu?
Oh,
No, sir.
yeah. So,
Indian, yes. Yes, please.
yeah, there is one more question wherein it has been asked that whether what are the practical challenges faced companies have faced in aligning the integrated reporting framework recommended by SEBI?
Okay. So I'll tell you the most practical challenge, top three, four challenges which while I become a preparer, what we face aligning an integrated report. The first challenge is that companies think that it is a story. It's a way to tell story. I'll show you how does an integrated report looks like first, right? This is what an integrated report is. This which is coming on your screen. This is a value creation model. This looks like this, or this looks like this. This is one page of an integrated report, which I told you is the heart of the integrated report. So the first challenge is we see if you zoom this, it talks about lot of numbers. If you look into this screen, it talks about 47 manufacturing facilities, 30 plus industry 4.0 use cases in manufacturing capital. In intellectual capital, it talks about 13.44 crores of R&D which is being done. In human capital, it talks about the total number of employees. It talks about the number of L&D, learning and development hours, which has been provided. So I face two major challenges. One, people write these numbers because there is no way to measure them in a very perfect way. So I find when the numbers come from the departments, because what essentially happens is for financial capital, I move to finance department. For human resource capital, I move to for human capital, I move to HR department. For social and relationship capital, I again move some part of me go to HR department and some go to CSR. For natural capital, I move to sustainability. For intellectual, I move to the research and development departments. Every department wants to talk very high about their achievements. So while as a preparer, I found the numbers are not matching to actually what has been reflected in their finance and what is reflected elsewhere. So I and Chindu were only looking at a report where the number was reported like 10 million or 10 million people lives impacted. And when you actually found that number, it was not that kind of a number. Then they said that we have shown a cumulative effect from year 1991 when we take that CSR initiative till date. So it's challenging. So first challenge is if you are preparing an integrated report, first have a governance structure. That's why I was telling you that you should talk about reliability. The reliability of data is challenge one. The conciseness of the report is challenge number two. Lot of stories, lot of qualitative data, nothing quantitative. Challenge number three, to obtain relevant KPIs from the user departments. So I'll share an Excel on your screen. Just while I was taking a session, we were doing this for a banking company. So it is on my laptop. This is the quantum of KPIs you have to actually get. Look at the numbers. So, okay, financial capital, we guys are well versed, right? Any number in financial capital, a chartered accountant can easily dig it out. But when you talk about manufacturing capital, this is for a bank. How much is the branch network? The number of ATMs and CRM, the investment in capital expenditure, the book value per share, retained loan book growth, LCR accretive deposits growth, current account and saving accounts, digital banking customers, growth in rural deposits, growth in rural advances, total digital transitions. This is all I want in my manufacturing capital. So the biggest challenge is to get this data from a bank which has approximately 6,000 branches. And an integrated assignments are not short, small assignments. We take an year to build up an integrated report. So that needs to be taken care. When you move to intellectual capital, market shares in UPI, investment in, and there's a lot of market reports you have to take. Net promoter score is okay. Everybody measure it. Market share in digital transitions, cyber security enhancements, digital banking transactions growth in percentage, value of intangible, brand equity in terms, institutional knowledge growth percentage. So all these data is one problem. Another problem, last, which I feel, is the comparison. Every company wants to report their tailwinds. You understand tailwinds, right? What is favorable? If their branch and network has improved, they will report it this year. Next year, their ATMs have improved, but branch has not improved to that extent, they will not report it. Since it's voluntary. So I have two problems. One, the stakeholder is not able to look the KPIs in a longer horizon because companies are smart enough to not keep their KPIs constant. And second, if I am taking these three KPIs, the other peer bank is taking another three KPIs. So the entire purpose of the integrated reports gets defeated. The regulator wanted investor should be able to compare A bank with B bank. I can only compare if the A bank is reporting the same parameters which the B bank are. But this is the discretion and the framework is also voluntary. So these are top 4-5 issues as an integrated report preparer you would face. And last, sorry, this is not only number game. There's a lot of content which has to be written with it. There's a lot of story writing. There's a lot of brand and theme embedding which we need to give. Mahindra say we rise. Unilever say purpose-led future fit. Axis Bank say dil se open. All these themes with this KPIs needs to be embedded, and so you should have a separate team of content writing. Only capturing data will not help, but a lot of content writing needs to be done. Content writing on sustainability, and then you require for each kind of content, since we are depicting 6 capitals, you require different kind of acumens and resources. With every different industry, you should have a lot more deeper industry perspective before you start putting up or writing the integrated reports. I hope Kinjan, I am able to answer this. Any other question we receive?
Not yet, sir.
Okay. So we take this forward to the presentation again. Okay. So I am coming again on how do you write this, right? So as far as integrated thinking is there, so we talk about the trade-offs of the capital, the interdependencies, the stakeholder idea, how business models are created. The screen which was appearing on your screen was of the business model, how the environmental external risk opportunities are embedded into it, and how the organizational, financial, and non-financial performance with each outcome of the capital is depicted. This is still theoretical. This is something which we discussed while we were discussing the notification. So now the idea is, through the objective of integrated reporting is, when you apply the framework, please ensure that how your activities, relationships and interactions, your activities, business, non-business, your relationships, all kind of stakeholders, your interactions with at large, whether the organization is able to create value, preserve or erode. So there could be a case while you actually keep your KPIs constant, you might be able to demonstrate that this year this company's human capital has got eroded because last year the L&D per hour was coming, the learning and development per hour was coming out to be per employee was 15. This year it is 12. Now, if my 3 hours is deleted from my L&D initiative, I say on this KPI, my human capital is eroded, which no company wants to talk about. But the ideal idea is if my 3 hours is eroded, then where did I compensate it? So idea is when I depict my manufacturing capital and the output of my product, there I say, okay, my employees this year might have eroded human capital, but they have improved their manufacturing capital by investing these hours into manufacturing. It is that level of integration which as of now India has to do a lot into it. I hope I am able to answer it gradually. If you have any questions, please start putting up those questions right away. And I'm saying because you will not realize that how fastly we start moving to preparation of an integrated. So this question came, Kinjan asked this question through someone, that how do you apply integrated reporting in the company? And while I was answering this question, I also put up a thought to you where I said that these are the problems. When I look into the problems of doing an integrated, the first advice I give it to all the corporates, all the preparers, that first you apply the framework for internal performance management reporting. Since you have to interact with various process owners, say you are in April and your AGM is in August, and hearing me out, you decide that okay, let's put up an integrated report this year. Tell me whether you have a governance there. When I say governance, that means whatever data these departments will give is accurate. Also tell me, tomorrow you go to your intellectual capital process owner and you start seeking the information, okay, what is the total R&D done on sustainable technologies? Give me what is the total, what kind of initiatives you have taken up, how can we quantify it? I talked about so many KPIs which were appearing on your screen. They might not be able to ready with they might not be able to give you those KPIs. So an integrated reporting is a conscious decision which should be taken at the beginning of the year, not at the end of the year, because it is essential. If you are publishing an integrated report, it needs to pass through your board just like your annual accounts. So it's just not about presenting a story or presenting some KPIs pertaining to capitals. It's also about whether these user departments will have the information or not. If they don't have it, that's where I suggest that the company should start doing it in-house. Don't publish it for the first year. Just measure it. Just like in ESG reporting, you set up a baseline, decide, okay, for these capitals, this is what my peers are disclosing, this is what I have been disclosing, or this is the data I have, and how does it looks like? If this looks okay, if you're able to get internal KPIs reported, if you're able to track their performance month on month, that's where when you should go to the public and disclose your integrated reporting KPIs. So this framework only gives you option. First it says, okay, apply for internal performance management reporting, and it's a great strategic tool. I have seen companies, if you have to convince your management, I have seen companies who are adopting this and getting wonderful results. Now my HR guy knows that at the year end he will come and ask whether I have improved my L&D per hour or not, how many LMS I have been using, what is the attrition rate, what is the quantum of maternity benefits I have been able to give. So he works throughout the year to maintain his KPI, which because he knows this will go to the public. So this is first option. Second, you can apply to any existing investor report which I have not found in India. You can apply to a non-investor report also. Precisely, India is on option D. Unfortunately, all Indian companies have directly come on option D, irrespective that a lot of contemplation, deliberations over years I've been taking on integrated have happened, and we request them to first exercise option A and then come at option D. But still, companies in rat race of depicting something, some classy thing to their stakeholders, go with option D. Option E is you can combine your existing reports as a precursor to integration using an integrated report. Primarily, I see apply it internally, right? Go for an investor, embed it into an investor report if you want, maybe in a quarterly presentation, and then take it to your annual report. So that's the ideal practice. Now I hope I am able to answer the question that how do you implement this? You're saying something, Ginjan?
Yeah, so Ankit, there are a few questions. Uh,
Sure.
One question is, are Indian companies ready for mandatory integrated reporting regime? Why or why not?
If I think in terms of readiness, only the uh, top 200, top 250 are ready. Because to build up integrated report, there are a lot of budgets also which are required in making your each capital owners robust. All these departments needs a lot of monitoring and tracking. But yes, top 200, top 250, they appears to be ready, and they're already preparing it. There are companies who are preparing it even since 12, 13 years. Companies like Wipro, I think they have their 12th or 13th integrated report. Unilever have their 10th integrated report coming this year, which is before the mandate. The mandate came out or not the mandate, but before the circular came out in 2017. So yes, we are ready. But if regulator really wants to come out on it, then IFRS also needs to standardize certain KPIs, industry-wise KPIs, is what I personally feel. Kinjan, we have any other
Also,
question?
yeah, also there is one more question from my end.
Okay,
So
Kinjan.
since this integrated reporting is an optional reporting,
Right.
so how do we, so if you are supposed to compare one bank to another bank, or if you're supposed to compare one FMCG to another FMCG, then
Right,
as you
Kinjan.
said that the KPIs are KPIs used by one company is different than the KPIs used by other companies. So then how do
Right.
you, as in how would you able to compare which one is better in terms of performance or overall?
So that's a Kinjan. That's where I said there's a problem, right? And that's why I said that the KPIs needs to be standardized at some level. Not all KPIs, but it's a concept kind of a reporting, right? It's not something that's a difference between the BRSR and integrated is that there is no scope of an alteration in the content there, right? It's a content driven reporting, more inclined towards the stakeholders. So still, but when you will see insurance company Future Generally versus ICICI Lombard versus ICICI Prudential versus Max Life, you will see some KPIs are still comparable, but not all. And those KPIs, uh, say this year, you will see every company, every insurance company writing that how many non-coal projects they have underwritten in their natural capital. So consciously, all insurance companies have taken strategic call that we will not underwrite coal projects. So they are reporting that number now. So still comparable, but not completely. We need to keep this constant, still evolving. But once this becomes constant, I think you'll get a lot of better results out of it. That's the idea. Still coming out. Maybe another 5, 7 years, you'll see absolutely standardized integrated reporting. Only the qualitative content will change. I hope
Okay,
I'm able
thank
to
you.
answer you, Kinjan.
Yes, yes, very much. There is one more question wherein it has been asked that is there a standard assurance framework for integrated reports? Can CAs provide assurance and how?
I told
Can
you
I?
that. Sure, Kinjan. I understood the question, right? But you want to add something to this?
Yeah, so based on you whatever you had discussed or whatever you insight you have provided, according to me, it is from the management, right? The integrated reporting comes from the management.
Kinjan, yes.
Is there any
Just like
role?
financial statements, who are the preparers of
Right,
the financial statement? They're the management,
right.
right?
No, no. Can CAs provide assurance and how for this?
Absolutely. This is not profession agnostic. In fact, CA should provide it, right? It's a limited assurance which are given on it, not a reasonable assurance like BRSR. In fact, still 50% of Indian companies, even on BRSR, are uh, getting assurance from chartered accountants firm. You can very well undertake these assurances, but it is not profession agnostic. You can also take it, and somebody also can take it. The standard, which is the ISI 3000, 3410, and 5000, does not require any mandatory qualification, but in a subjective way says that the person should be skilled enough to assure. So if tomorrow some greenwashing happens or some you know wrong reporting happens, you should be able to demonstrate that you had enough experience while doing assuring the non-financial reports. So very well, I hope I answered it. The standard SSI 3000,
Yes.
3410, ED 5000, chartered accountants can do it, but it is not profession agnostic. 50% of the assurance is being done by chartered accountants. Out of that 50%, 90% is being done by Big Fours. Okay.
Okay.
So, uh, so idea is that once you do it, you have to absorb one thing that it is a principle based approach, and the intent is to strike the appropriate balance between the flexibility. It only talks about flexibility, right? Balance between flexibility and perception that recognize wide variation of individual circumstances while enabling sufficient degree of comparability across organization. So what has happened is that companies have taken flexibilities, but in that flexibility they have lost this intent of comparability. As of now, it does not provide any specific KPIs, right? That's the third point. And as I told you that it could be one very critical way to communicate as a part of an annual report to the stakeholders regarding the performance of each capital and the impact it have on its stakeholder. So the 6 capitals which we were talking about were the financial capital, manufacturing capital, intellectual, human, social, and relationship capital. As of now, it is voluntary that how many capitals you want to report, but something which is completely applicable to your organization, you should. So a service sector not reporting manufacturing capital might do, but a manufacturing capital not reporting manufacturing capital will not do. Which means that if you are reporting something, your KPIs needs to be bifurcated into these 6 capitals. Now, here we come on integrated report. And this section talks about when an integrated reporting, that's why I said that we have more case studies. This section talks about, and it's a mandatory section which you have to create while you are building an integrated report, which is called about the report. It talks about few very important things, and before you make up an integrated report, let's look into these important things, right? It talks about reporting standards and frameworks. Number 1. It talks about which reporting standards and framework has been applied while preparing it. Naturally, barring the Companies Act, the LODRs, the INDES, the secretarial guidelines, the national guidelines on responsible business conduct, or the United Nations SDGs. The reporting standard for preparing an integrated report is IFRS Foundation. And if you're preparing it, you should say that I have been preparing it as per the guiding rules of IFRS Foundation. So the first thing you have to specify is which law. Because there are multiple frameworks, I told you. Some companies also write GRI, CDPs, because they are reporting some indicators of GRI, CDP as they are having their global presence. So they are reporting it as a part of their integrated reports. Second, so I hope the reporting standard is clear. Now we are building this report. And I am telling you how to build important sections of the report. Then you have reporting boundary and period. The left and right side are 2 years of the report, right? Nothing more. So it talks about what is my reporting boundary. Just like BRSR, you can choose here whether you want to report a particular KPI in consolidated form or in a standalone form, but this needs to be specified here. If otherwise stated, which means that you chose to report it on consolidated way, but a certain KPI you are not able to measure it across the geography, across the various locations, across your subsidiaries, then you have to specify this. Then this needs to be specified. The third is the accountability statement. And that's what I was telling you, that reliability and completeness. On your screen, you see an accountability statement which says that the integrity of the facts and information, I'm reading it because it is a very small font and you might not be able to see it. What is written in accountability statement? It says to ensure the integrity of facts and information, the board of directors and management of the company have reviewed the integrated annual report. Further, The board of directors confirm that integrated annual report taken as a whole is fair, balanced, and provide necessary information to stakeholders of the company's performance, business model, strategy, together with a description of the material risk and opportunities. So now the disclaimer has also come up. Since integrated reporting talks about a lot of future outlook, and one of the important core content which you need to build out is the future outlook. So as a disclaimer, you should give a forward-looking statement safeguarding yourself as preparer or assurance. The management also wants to safeguard that nobody should rely on the forward-looking statement. These are just expectations, and in no case integrated report expects you to put a forward-looking number, right? Then it talks about materiality determination process. We will discuss what materiality determination is, but we discussed it. This is the double materiality and how a materiality matrix looks like. I'll show you. The assurance which has been done, right? And the capitals and the stakeholder groups which the company has talked about. If this is clear, this is the foundation of the building. If your reporting boundary is clear, you know from where to collect my data. If the board is ready for the accountability statement, you know that the integrity and the report has been got approved. If you talked about the frameworks which you have benchmarked, if you talked about the reporting year, because there might be a case that if your foreign subsidiaries, then they are reporting in a different, they're reporting in a calendar year and you're reporting in a financial year. So reporting period also needs to be extremely clear. The assurance partners needs to be clear, and if this is done, I think we have set up the tone. This is our first section of the integrated. And people have different ways to present it, right? That was an example of a FMCG. And while you look at, I told you that, certain companies like Infosys are still very attached to GRI, and they are talking about, see the history, the legacy. We feel the concept is new. Infosys says this is 16th year on which we are disclosing our non-financial aspects of the business. You said chartered accountant companies can do this. Yes, it can do this. It also talks about how they identify each capital. And to understand each capital, I think this is a great way to look into the definitions. How do you identify each capital? So when we look into the financial capital, we see that company is saying we have obtained our financial capital through funds. So they're talking about which kind of KPIs you will find it in their financial capital. We obtain our financial capital through the funds generated from our business operations and financing activities. Our strong performances on the back of meticulous execution over the years, as reflected in the combination of growth, and has led to build a strong debt-free and liquid balance sheet. Our focus is on ensuring sustainable and profitable financial position. So companies identifying it. And you see very interestingly, company is, instead of talking about, because they are Infosys, talking about the manufacturing capital second, they first talk about the human capital because their human capital is important as a service industry. So they say nurturing talent for the future is essential for our continued success. Our service, our SC model for engagement, connect, collaborate, celebrate, care, and culture is designed to strengthen and reinforce our culture so that it is so that it is experienced uniformly and positively by employees in the hybrid mode of work. Similarly, they talk about intellectual capital in a very brief way. So here about the report section, just to give you a clarity how an integrated report looks like, right? It talks about how about the report section is there. Then in your integrated reporting section, right, it talks about ESG strategy and governance, which is page 38, stakeholder engagement, which is page 40, materiality assessment, impact valuation report, value creation report, even to the extent. So it's essentially not talking about capitals, but majority of the integrated reports also talks about capitals. So I have just zoom in the versions of the reporting boundary. These are some, things to be taken care. What is appearing on your screen one is absolutely wrong. It comes from a very top listed company because this question was also coming that how much we are geared up. As a top reporting company, they say that the integrated report covers statutory financial information. That's it. That's what they write it in the reporting period. Instead, what is on the extreme right bottom corner, that's the way you should write up a reporting boundary. We discussed it and it has to be comprehensive. When you look at the second instance, which is the right top corner, it says it presents a non-financial and non-financial performance. Right? So people are discussing it. Once this is done, then we come on a very important section, which is your stakeholders identification and materiality assessment. As I told you in the beginning of the session, a lot of chartered accountants are doing SEMA, and through Churchgate, through various portals, they are able to demonstrate, they are able to host stakeholder engagements. So this company has, this is not a double materiality matrix, but this company has tried to demonstrate material issues, categorizing whether the stakeholder group is internal or external. If the you can see what are the stakeholder groups. Now you should be able to relate your local community, your shareholders, your customers, the associations. These are the external stakeholder which company classified. Your internal stakeholders are your board or employees. I feel a genuine miss in the external stakeholders, specifically the suppliers. So this looks like a limited stakeholder, and companies also demonstrating how they engage. But I wanted to show you an average stakeholder engagement and materiality matrix. Company says that our material issues are waste, product packaging, water management. These are my high critical issues. GHG management, energy management, IT security and customer data. Company says my moderate material issues are human rights, board transparency, supplier assessments, risk management. All this is done through an activity in which the companies have to engage to their stakeholders and find out the impact, material issues impact, and the risk arising out of each materiality assessment. Next, we have a better materiality matrix, right? And it's more like a double materiality, which talks about importance to organization and importance to stakeholders. You can see the stakeholder groups are mentioned, how they did the materiality assessment is also very specifically coming out. The key stakeholder groups are on your screen. Your key internal stakeholder groups are also on your screen. How the materiality assessment was done. In this case, company talks about shareholders, investors, customers, suppliers, NGOs, local communities, government regulators. It also talks about employees, including contractual employees, including the senior management. The way this activity was done, so ideally, if you're doing a materiality assessment for the company which you're doing, the first thing which you need to do is a peer benchmarking and prepare a universe of material issues. In fact, before even you go to material issues, you might be able to first, you should be in a position to identify right stakeholder groups. As you see between the last slide and this slide, the stakeholder groups have changed because the company thinks about this company thinks about the stakeholders more holistically than the other company. And it's about the size of the operations. You're talking about Reliance versus some other company. Naturally, a Reliance has more stakeholders and needs to capture. And there could be more stakeholders like media. Media could be one of the stakeholders. Your advertisers, again, could be a kind of stakeholders. So the first step is to identify stakeholder groups. Then the second step is to find out material issues out of it. To find out material issues out of it, you need to do peer benchmarking, identify stakeholders, post survey. This year we did materiality assessment for 7-8 companies. One of the bank we received 1,170 responses. When the bank answered on those material issues, that's when the stakeholders answered, that's where the entire concept of material issues changed. So the idea is what the CEO feels, what the board feels should not be the material issues for the organization. What the stakeholders expect from them, that is why you see on the matrix also that what is important to organization and what is important to stakeholder is what needs to be demonstrated and depicted. I hope this is clear. So once you do the stakeholder survey and you understand the evaluation, that's where you start prioritizing your material issues. Is it clear? So now, once you have built your about the report section and materiality issues section, then you have to look into the risk and opportunity section. And from your material issues comes your risk and opportunities. For example, a climate change is a risk and opportunity. If you're a renewable generating company, then a climate change could be both risk and opportunity. Out of this material issue, what I'm trying to communicate, you will find risk and opportunities. And the another section which needs to be built as a part of an integrated report is your risk and opportunity section. So in that case, you might need to assess for a oil mining company, climate change has to be a top risk.
Oh,
Yes, Kinjan.
Ankit. Yeah, so you have changed the slide because we are still on understanding the material issues.
No, I have not changed the slide.
Okay, okay.
I am reading from this slide the right side where I am saying that the climate change, right? We have to from this climate change material issue, we have to move to the risk, assessing the risk from this material issue, which is the climate risk itself.
Okay.
For a company like Reliance, this might be a major issue because they are into oil exploration. For a company like a renewable company, say Vari Energies, Vari Renewables or some renewable energy, for them it might be both risk and opportunities. The more people are talking about renewable sources, the better their product is going to sell. So every material issue will bring either risk or an opportunity. It depends on the nature and how it is impacting an organization. So you see whatever is coming on your screen from climate change to managing environmental impacts to energy efficiency and operations to water and effluent management, raw material security, ecosystem and diversity, innovation and technology, and they have also integrated it to the capital. See, all which is marked in green is the natural capital issues. You recall the original idea of integrated? They say interlink. Interlinkages needs to be seen. The interdependencies needs to be seen. Through this material issue, the company is able to demonstrate the relationship between natural capital and their material issues which are pertaining to natural capital. This is typically a reasonably appealing materiality matrix. Important is 80% of the companies, not 80, 70% of the companies, we did a primary research over it, are depicting the section of stakeholder engagement and materiality issues without doing a materiality assessment, which is the biggest threat I sense, that as a board I feel these are material, but I have never interacted with my stakeholders. So that's something which needs to be taken care of. Once you build the materiality section, accountability statement is something which we reviewed it as a part of the report, right? But what needs to come into the accountability statement is what I wanted to tell you. As of now, even the accountability statements comes out to be very concise. One, if you're doing an integrated reporting and publishing it to your stakeholder, it is necessary that this move to the stakeholder, this report is taken through the board. Please don't publish any unapproved integrated report. This shall be non-compliance to SEBI circular. So what accountability statement should talk about? It should talk about the acknowledgement and the responsibility to ensure the integrity. It should talk about, like you were seeing that statement of Unilever, that what is board's thinking, what is board's opinion or conclusion. That is why they say that it is a fair and balanced depiction of our non-financial indicators. From here it is coming. If an organization is not able to apply some requirements, that's another thing which they need to mention in their about the report section. And last it says, if possible, with the accountability statement, please put up process disclosures to supplement the statement of responsibility from those who are charged with governance. Now it is clear. So now we have governance, we have integrity of integrated reporting ensured. We have written the about the report section. The material issues are with us. The risk and opportunity section is built up from the material issues. Now comes my capitals, my value creation models. That's the last part of our lecture. You see, I'll show you more comprehensive one. That's where we were. This value creation model talks about what are the value drivers. It talks about the value driver is inspiration and ethos, the operational environment, the stakeholder demands, the opportunities and risk. These are the four value drivers. And it talks about each capital. What is my financial capital? You see from left we have started. But what is core is what are the inputs of each financial capital. These are the inputs of financial capital which is here on the screen. You see on the top row, our capital inputs that govern Cipla's global operation. All inputs which we have given with what all resources you have allocated on each input. So they have quantified it pretty well. and then they move to how the business model works like and what is their value chain proposition. Here you see the global value chain with an end patient focus. How does Cipla is able to demonstrate? That's why I told you that it is a visually embedded report. And how Cipla has been able to demonstrate that their medicines reaches to their patient is a fantastic way to do it. The territories, the brands, everything embedded in one page. And finally, the outcome and output. Only thing which is missing. This looks like a comprehensive business model. But only thing which is missing from here is the impact on the stakeholder and the stakeholder groups. So had we been able to demonstrate that my financial capital is created, preserved or eroded to each class of stakeholder, that the ultimate intent of the integrated reporting would have been accomplished. Similarly, companies do different things. This is for a banking, and here also you see the value drivers, you see the external environments, you see the inputs of each capital, something which you can commonly see: inputs, strategy and resource allocation, strategic pillars. Outputs is something which is in short term, outcome is something which is in medium term, and impact, which they have also not depicted, is something which is in long term. But at least they have talked about the long term objectives. You can see on the central right side, and their key enablers. Also, you like this fact that the company is able to interlink it to UN SDGs. So now when you link it to UN SDGs, it appears to be a sustainability report with a holistic business perspective. Similarly, for a service sector company, now they talk about stakeholder groups, but they are not talking about the kind of impact they are able to create on stakeholder groups, right? Sorry, I lost my screen. I'll go back. Kinjan and Chindu, if you have any questions, this is the last slide possibly we are discussing. So in audience, those who have questions, please put up their questions
Yeah.
pertaining to integrated. I'll just complete this, Kinjan, and then we take up the questions, right?
Okay, Ankit. Yeah, sure.
So here you see the inputs, the process, outputs. They have not. They also have defined their business process. It's not a very easy thing to come and demonstrate, but they're talking about outputs and outcomes and the impact, right? You see the intellectual capital input. They say 1,90,000 employees trained on digital skills. In output, they say 62.2% digital revenues, 25.6% constant currency digital revenue growth, 56 digital leader ratings. So as of now, the challenge which is there with this model is your input and output should be correlated, just like your balance sheet. The closing balance of your financial capital, the idea of integrated is should be the opening balance of the next year. That means if I have to demonstrate it, I will say my financial capital was 75,407 crores and the output is now 80,500 crores. On the impact, I would say for my stakeholder, for my shareholders, I have increased the wealth. For my investor, I have increased the wealth. For my clients, it does not impact. For my employees, if I have retained profits, I have again increased the wealth. So the output and input needs to be correlated. Similarly, in human capital, we had 3,43,234. what is the total number of the employees, out of which you could have still written that 50,000 are freshly graduated and hired globally. So these are the small changes which we need to embed into the value creation model. This is again, I told you that I still feel that the correlationship between inputs, outputs, and the impact is something which is we are looking at. So precisely an integrated report table of content will have few important sections which I am summing it up, and I hope that the entire journey has been easy to understand. In terms of skill, yes, you will require content skills than anything else. Graphic you can is something which companies get it built in-house only. But content skills in terms of strategically advising what kind of KPIs needs to be depicted. So I'll freeze the table of content. You will prepare about the report section. From about the report section, you will talk about the external environment as a mandatory part, the organizational overview and external environment, including textual analysis. Then you will do your stakeholder engagement and materiality assessment and make your capital owner aware about it. From materiality assessment, you will move to from materiality assessment, you will move to introducing each of your capital, which is your financial, intellectual, social relationship, natural human capital. When you do that, define those capitals, their KPIs, then talk about how the business is able to create value in short, medium, and long term through the value creation model, which is on your screen. You can embed the strategy and resource allocation section here also, and you have an option that you build up a separate section of strategy and resource allocation. Talk about future outlook. That's what makes an integrated report complete integrated. Then in this, we had subsections we talked about. To the extent you are able to connect all your information to material issues, United Nations Sustainable Goals, uh, and how and the linkages with short, medium, and long term is what the idea is. I hope this entire concept of integrated, I am able to push certain things to you. Thank you so much for patiently listening me. I also want to thank, before I take up questions, I'll do the formalities. I also want to thank the Sustainability Reporting Standard Board for, talking about integrated reporting. And this is a very important framework globally. If Indian companies needs to compete, there is no other way because the BRSR is still not too aligned to the global framework. Integrated would prevail, and that is why the more the global companies are, you will see more companies preparing integrated reports. I am again grateful for all the questions you asked and keeping it interactive. I am thankful to both the moderators and board again. Thank you so much. And Kinjal, happy to take questions very quickly because I have to sign off at another couple
Yeah.
of.
So Ankit, it was really nice session. We have a couple of questions. One question is relating to what challenges might organization face when trying to integrate both financial and non-financial data into cohesive report.
What challenges, Kinjal? That's what they've asked.
Yes, yes.
I think we
What
have.
challenges might?
I think they missed it, but I told you 4 5 challenges which are made. But I'll tell you one more challenge barring this. Uh, Kinjal, I was looking at this waste data of a company, right? They say they do 100% waste recycling, right?
Mhm.
You
Okay.
know, and there is no cost which is there in their financial pertaining to waste. So the trial balance
Cost
does not
benefit
talks
equation.
about anything, any measures which you have taken for waste. They say we don't discharge, we give it to third parties. The
Right.
finance never talks about third party lifting any waste or water. So as professionals, whatever you are reporting, a first objective has to be how do you correlate it?
Correct.
Like for water, the ISF standard says 45 liter per day water consumption you take, right? So in the bank we took it, but when I looked into my assurance provider says that when I look into your trial balance, you have no cost of water because 80% of my lease arrangements are done inclusive of the facilities. So when you prepare it, the real challenge starts there. Theoretically, I can, talk, but the practical challenges are like this.
Got it. Also, whether this report will be applicable to large non-corporate NPOs, non-profit organizations.
Apparently not. As of now, no. As of now, no. As of now, this is make for more stakeholder understanding. I don't see getting it very soon, getting it applicable to any NPOs.
Hmm. Okay. Also, I think this is the last question we have. Robot system is key to source and analyze relevant data information. Do we have any known application which can support integrated reporting reports? Business words like
I use
materiality,
lot of generative
boundaries.
AIs while preparing it. I will not lie, but lot of generative AI, if you train the models well, I think they'll come out with great reports. But
Okay.
there's no tool. NSC came out with advisories, not tool. But we have our in-house tool, our own chatbots and generative AIs. You have to invest something on technology to make it. But as chartered accountants, we should be open for it also. By see, when the conventional things are going away, right? When we talk about income tax audits, we talk about GST audits, we talk about so many things, right? That this is something which is not lucrative. There's a very lucrative line here. My life changed when I entered into sustainability. I mean it. And this board also knows this pretty well, right? With whom I'm, constantly engaged with. I am happy that from a financial reporting expert, I became a non-financial reporting expert. So make the transition, invest in technology, invest in upskilling. You will sense that really this the last few things rest integrated. You could also have read it yourself. But last few things I sense that change and transition in my life and feel happy that finally I moved from financial to non-financial.
Okay. So there are two more questions, last two questions. What tools and frameworks can help professionals prepare integrated reports in India?
IFRS Guiding Tool 2024. Please Google it. You will find it on IFRS website. It
Okay.
is open
And
source. You just have to enter your email ID and download it.
okay. And how does the integrated reporting framework integrate with other reporting standards like GRI, SASB, ISSB, IFRS S1, S2? IFRS
So
S1, S2,
IFRS
I2,
S1, S2, ISSB, so they are same. GRI is a legacy standard, 20-25 years. So certain KPIs are related, but companies have stopped reporting on GRIs now. Gradually this paradigm shift has happened. And see, if I am doing a BRSR and integrated in India, why would I go and do a GRI? So when our BRSR was prepared, na sir, then at that point in time, we benchmarked it to GRI, CDP, everything. And you can see the NSE advisory. So if you are doing a BRSR and integrated, some parameters are linked to GRI, but not way too much, not too much.
Okay, so now we end our session by a word of thanks. Thank you, everyone. Good evening, everyone. On behalf of the entire team, I extend our heartfelt gratitude to each one of you joining us today for the webinar on integrated reporting. Your active engagement and insightful questions have greatly enriched today's session. A special word of appreciation to our distinguished speaker, CA Ankit Maheshwari, for sharing us profound insight into integrated reporting. Your expertise has illuminated the importance of transparent corporate reporting in integrating financial and sustainability metrics. Integrated reporting is crucial in today's business landscape, fostering transparency, accountability, and trust among stakeholders. We trust that today's webinar has equipped all of us with valuable insights to navigate the complexity of integrated reporting and its impact on organizational decision making. We would like to invite you all to stay connected with us as we continue our commitment to exploring and advancing sustainable practices. Our upcoming webinars are scheduled every Thursday from 4 to 6 p.m. Will delve into various emerging themes into sustainability. Thank you and have a wonderful day.
Thank you,
Ankit, you
Kinjal.
have anything to
No, no,
say
Kinjal. Thank you so much.
or
Thank you for
anybody?
helping me out with questions. I'm thankful. That's it.
Thank you very much.
Bye.
I think so. We can